Ma'am, good morning. Great to have you here. Thanks very much. How do you rate earnings so far, ma'am? And some have pointed to consumer companies' strong volume growth numbers in the fourth quarter and are saying, well, it's a turn for the better, that is. What's your assessment?
I think just looking at earnings across different sectors, clearly there is still a divergence between earnings of various sectors. Obviously, because they are in different stages of catering to economic growth. But I would say in general, the commentary for the future is a bit more positive than we've seen in the past. Everybody's expecting that things are going to start improving from here. Of course, it's all contingent on getting a normal monsoon, because that's very critical at this stage of India's economic situation, that the monsoon comes out really, really good. But other than that, I think things are starting to improve, is what my sense is.
Right. That is a big debate right now, whether what we are seeing is going to be transient, fleeting in nature, or some of the growth drivers are in place and they're going to last. You're saying, well, it's the latter, that things are looking much better now, right?
I think things are looking up. I wouldn't say they're already looking much better, but I think they're definitely looking up. Of course, India is a very big market, and you can't generalize that the same holds true for all companies. But if you look at different sectors, in certain sectors where things have been quite depressed, there particularly, I think things will improve. So whether it's infrastructure, whether it is anything related to the agri sector, which includes autos, which includes a certain amount of affordable housing, which includes agri commodities, includes companies that sell to the agri sector. I think, and then of course companies that cater to agri finance. I think there, if the monsoon is good, which is the expectation right now, so there I think things are definitely improving. And if you speak to various companies, everybody's talking about seeing green shoots.
Yeah, no, absolutely. The only thing is we were kind of sort of in a way similar position I think in October last year, in 2015, and then we had a couple of months which kind of let everyone down. Now we have a bit of a pickup again. So one just hopes that things stay strong. Okay, just talk about banks, ma'am, because lots of PSU banks now, about a dozen PSU banks have reported numbers. Private sector, mostly the big ones, have all reported. What the public sector bank results show us is that stress just continues. I mean, as the research report this morning said, called it, it's from stress to distress. That's how they put it. How would you view it? I'm sure you looked at some of the numbers. Bank of Baroda is one of the better, regarded PSU bank companies. They reported 6,000 crores of fresh NPLs outside the asset quality review. So what's really going on? Would you still call this cleanup in progress, or would you agree with the assessment about distress?
No, I think it's more cleanup and progress, because the banks are under pressure to clean up and to deal with the NPAs, and some banks are dealing with them faster than others. And so you're going to continuously see this cleanup process is going to take a while, and it'll appear like things are getting worse. But it's mainly because different banks are dealing with these cleanups somewhat differently and reporting. Some are reporting all up front, and then taking some, there's obviously tail risk to the remainder, and some are going to just come out with them slowly. So I think things will take a bit more time for the cleanup to really be cleaned up.
But do you think is going to be, not now, but say with a year plus kind of perspective, money to be made in public sector banks? Because once the cleanup is over, you still need to get growth, ROEs, etc., right? I mean, nobody's even talking about that. We're still talking about whether all the bad loans are out, provided for, etc. So growth is somewhere out there far in the future. The fourth quarter has also showed us that credit growth is actually declined. For the 12 banks which have reported, on an average, credit growth is down 2% year on year. So, I mean, where is growth really going to come in from?
Right now, if you look at, well, of course, if you look at the economy, it's really the retail sector where the credit growth will still be good at the current stage, because the corporate sector is not really adding capacity, so they don't really need much credit at the moment, and those that need credit are the ones that are under stress. So credit growth through the corporate sector therefore could continue to be weak for a while, because first they have to utilize their unused capacity, which means that the demand has to pick up and they have to start getting to full capacity utilization. And I think as things improve, certain sectors where there has been pain and distress, they might slowly start to need credit. But I think right now the credit growth is largely going to be driven by retail demand.
Right. No, I mean, some of these public sector banks have large retail franchises, right? We know that. Look at private banks. So if you take a look at aggregate numbers, HDFC Bank, for example, is 50% retail, 50% corporate. I think they reported some 27% credit growth, right? Here, public sector banks with similar kind of profiles are reporting degrowth, credit degrowth. So it's like completely stark, the difference. It could be market share gains, but with private sector banks, public sector banks going in some sort of a lending freeze, paralysis, not wanting to lend, book is too bad. Could be a variety of reasons, but for investors, is it a clear signal to stay away even if some of the NPL related losses are recognized?
Well, investors have to focus on valuation. At some point, the valuation growth disparity, you have to take a call on growth and look and see whether that's all discounted in the valuation, because these banks are too big just to fail, right? They're not going to go under. In the worst case, they might at some point down the road, there could be mergers, but they're not going to go under. So you have to just look at the valuation and see whether the valuation is discounting enough of the growth. But let's shift to some other sectors, because I don't want to talk too much about the banks.
Okay, so let's talk about what you want to talk about, ma'am, in terms of sectors which you think provide reasonable growth and are available at reasonable valuations as well. Because the problem is, where there is growth, valuations are in the stratosphere.
Actually, if you look at this year globally, all right, it is the countries that have been the most distressed in terms of valuations that are performing. Even if you look at companies and stocks that are performing across the world, it has really been a mean reversal trade that has been happening. It's the value stocks that are outperforming the growth stocks, because people now believe that the valuations have reached levels that make it compelling to discount the risks that are out there on growth. So I think even the value versus growth, if you look even in India, I think you have to look at things where you believe valuations are good and there's some prospects of growth, which means basically turnaround cyclical situations. That's where you look at Latin America, look at oil, look at gold. That's what's performed this year. Most everything else that is kind of at good valuations and more stable growth is sort of plateaued this year to date, and it's the distressed sectors and countries, stock markets that are performing.
So what implications does that broader sort of trend or overlay have for India and sectors here going forward?
No, I think India is an interesting enough market, a large enough market that you have actually all kinds of companies and all kinds of sectors. So in that sense, it's very similar to what you see in the US economy and market, where you have a very well diversified stock base to choose from. So even in India, if you see this year, it's, since gold has been doing well, if you look at the stocks of gold finance companies that have done well, better than some of the other NBFCs. If you look at where stocks have done well, it's the same trend as you've seen globally. It's the metals and the precious metal related stocks that have done well. And of course, in the middle of all of this, you also have some very stable growth companies in India in the consumer sector, both in consumer discretionary, consumer durables, that are continuing to do well regardless of what's happening globally. So I think one needs to have a portfolio that isn't too skewed to any one sector right now, because there are all these stable growth companies in India in the consumer space, consumer discretionary, consumer, etc., that one should always focus on and be in. And then at the same time, you have sectors that are globally driven, which are some cyclical in nature. One has to pay some attention to what's happening globally and then choose which of these one should be investing in India. And then there is this whole India-specific cyclical space, which is infrastructure, roads, some NBFCs, etc., that lend to those sectors. One should be looking at that as well, because there too, some of the government initiatives are finally showing up, and one does hear that things are moving in some of these infrastructure-related projects. Unlocked, projects that were blocked are being unlocked and unblocked. So there is going to be growth there as well. So I think you have to kind of look at all three spaces. India is not going to be immune to what's happening globally. It might do relatively better given where we are in the economic cycle, and that's what we've seen this year. We've seen, of course, Indian market is down, but not as much as some of the other markets. And within India, you've seen certain sectors that are up. So I think it's going to be an interesting and difficult year for investors to make money, but one will have to pay attention to a number of different factors.
Thanks very much. It's a pleasure. Appreciate you joining us this morning.